Hello, fellow viewers. You're once again welcome to another edition of Smart Money Talks. And as you all know, my name is Munja Shirley, and I'm here with no other person than 𝐻𝐿. And guess what? We're here today to talk about something that is the talk on every young person's mouth that you might know, which is no other thing than cryptocurrency. So what is there to know about cryptocurrency? I'm excited to hear what Erin has to tell us today about cryptocurrency. Are you excited? Please keep your questions coming because anything that you want to know about cryptocurrency, please, let's talk about it today. Erin? Today.
It's cold. It's very, very different from Abidjan.
Right, I can see from your outfit. So yeah, so today we're going to be discussing cryptocurrency and the risk associated with other tokenized investment options, right? So Erin, for someone who has never heard about cryptocurrency, what is cryptocurrency? What is it all about?
So cryptocurrencies are essentially currencies that are, or digital currencies that are not in your physical wallet, in your pocket, or store them under your bed. Static financial asset, if you want, with instant settlement and global access and freedom from intermediation. I mean, those are the kind of advantages, but at the same time, those are also some of the issues that pose some risk. And so,
wow.
Most viewers have heard about Bitcoin or so. I mean, that's probably the cryptocurrency that has been longest around. And yes, I mean, there have been people along the way that say how they made money with Bitcoin and all of that. But more recently, I saw an article which basically said that in Ghana, young people, because of unemployment, they go into cryptocurrency trading. And yeah, and I think as part of that, already some people lost significant amount of money because they ended up with some Ponzi schemes and things like that. And so I think that is where one really needs to be careful and then also distinguish what do you intend to do with cryptocurrency? What is your philosophy around it? Yeah.
Yeah.
So I think
so yeah, because anyway, I like what you. Yeah. Okay, Erin, I like the fact that you actually already started pointing out maybe some of the risks associated with it. Because so what I did is that before the show, right, I kind of like just asked the staff, kind of like the staff around, and I was like, okay, please, what are the questions that maybe you want to know about cryptocurrency? Because I know people have kind of various opinions about it, right? So some of the questions that they asked, I'll just read the first one. It said people say that cryptocurrency is risky. What's your take about it? What's your take on this?
So there are different risks. I mean, there is risk with the cryptocurrency scheme. So what happens, and I think quite often, is that people are invited to WhatsApp platforms and things like that, which are basically, at the end of the day, Ponzi schemes. So somebody is inviting you into a scheme where you are promised like big returns, and then at the end of the day, it's all a scheme. And once it tumbles like a house of cards, you lose basically your investment. Initially, you maybe make some good returns, and then it tumbles. And maybe based on has a legitimate base that there is some kind of a trader that makes money the if the trading goes the right way, and then if he loses money, you lose it as well. So there are obviously different variations of those. So that's one risk, that you end up in a scheme. And the reason for that is that crypto is not regulated really, or now countries start to regulate crypto platforms and basically allow specific crypto platforms to operate and so on. But it's all emerging, so it's not it's still a little bit of a wild west out there. So that's the one thing. The second thing is that most cryptocurrencies, apart from the stable coins that are more recent invention, are quite volatile. And so if you want to trade cryptocurrencies, then I mean you're basically, or then it depends on your investment philosophy. Are you a trader, somebody that just wants to see basically if the currency goes up, you sell, and then you buy when it declines again, and whatever? Those type of movements are quite difficult to forecast. I mean, people have got certain charting software and they rely on all sorts of indicators and nice graphs and charts, but at the end of the day, it's probably, I mean, that's where you can lose money. If you take a longer term view and you are an investor and say, okay, I put some money into cryptocurrency because I don't believe in the fiat currency system that this world operates. I don't believe in the long-term value of the US dollar because of the budget deficit in the US or so, and I'm looking for an alternative. And you invest for long term, so you basically buy a cryptocurrency and say, okay, let's see where it ends up in 20 years or in 10 years time. That's a different approach. Then it's maybe not that risky. But if you are a trader, or if you end up on some kind of a wrong platform or something like that, I think that's where the risks are.
Yes, Erin? Yeah, we lost you for a bit. So you were talking about the fact that if you end up on the wrong platform.
Yeah. Yeah, so I was saying, if you end up on the wrong platform, or if you engage in cryptocurrency trading versus, like, if you think it's about it as a long-term investment, where you say, okay, but you do want to buy crypto because you maybe don't believe in the long-term viability of the fiat currency system or in the value of the US dollar. On that basis, because of the budget deficit, on that basis, it may be a less risky option. But if you try to trade it and basically rely on all sorts of charts and things like that, you can end up with good trades, but you can also end up with bad trades. That's the one way how it's risky. And then the other risk is then that you end up on some kind of a fraudulent platform or in a Ponzi scheme or something like that.
Yeah. So, Erin, you mentioned the fact that cryptocurrency is volatile, right? So, can you expatiate on that? Because I think some people will be wondering, what do you mean when you say cryptocurrency is volatile?
It's very much driven by sentiment and by investors. Now, investors have a bit of a herd mentality, and it's human psychology. So at one stage, prices may go up and more up, and then those people at the bottom of the pyramid that think, now it has gone up by too much, they expect basically that it's going to decline soon, and they start taking profits. And then once the first one start taking profits, and the next one start taking profits as well, and then everybody is selling all of a sudden, and then it declines again. And so that is really what causes volatility. And really the value of a cryptocurrency is in the eye of the beholder. So there is no natural store of value, in a sense that if you hold a physical commodity, if you hold a piece of gold or a piece of land or something like that, you have a you have a more permanent store of value. For a cryptocurrency, because it's digital, the value is really something that is up to the human perception. That adds to it. But I mean, I think moreover, it's because it has become, I think the original idea was to trade in cryptocurrencies, which to use them for trade, not to trade in. But I think now has become more of a trading thing, evolved so that there are a lot of people that just trade on a daily basis, and with that it becomes volatile, and if it's volatile, then it's risky. So if the prices change quite a bit up and down.
Yeah. So I mean, why do you think people tend to make very kind of like, let me say, drastic moves and end up losing so much when it comes to cryptocurrency generally? Because the reason why I see a lot of people maybe have associated anything cryptocurrency to maybe scamming or maybe like bad investment decisions or things like that is because I think in the past, especially in our environment, we've seen a lot of people that actually get involved in cryptocurrency and they end up losing a lot of money, right? So I've actually seen some examples around me. So why do you think, like, what is the push or what actually influences people to take, like, let me see, like kind of like risk all their investments when it comes to cryptocurrency, and what can be done about it?
Yeah, so I mean, the question is, what alternatives do you have? If you have spare money, so now the one story that I read about Ghana's cryptocurrency craze was that it was an unemployed guy and he was borrowing money from a cousin in Finland to basically invest in crypto and then lost the money. So I mean, I guess that's already a bad start, because it's not your own money, you even owe somebody else. But imagine if it's your own money. So then obviously you have a lot of choices of what you want to do with it. I mean, you could invest it in your business as an alternative. You could invest it into shares, into I don't know, a myriad of options. You could buy a piece of land. So now if you want to go for crypto, then you have to decide what your end game is. Do you want to trade crypto, which is kind of, pretty much occupation in itself, because then you need to really be aware of the market moves, but it's risky because because of the volatility. If you have more of a long-term approach to it, meaning it's more passive, I think that's different, and that may, at the end, over the long term, it may not be necessarily that risky. Then, so that's just related from an investment perspective. Then there is the regulatory perspective, and where you can end up, because it's pretty much unregulated, you can end up on some scam scheme that or some platform that is run by scammers, people who take your money, and when you look, it's gone. So that's the other risk. And I think that's where, if you want to invest in crypto, then you need to basically do a digital due diligence to understand exactly, how does this, I mean, is it a well-known platform? What do users say about it? Is it secure? I mean, digitally secure? Is there two-factor authentication? All of that. Are your assets safe from cyber attack or whatever? How, if you want the money, how, or if you want to cash out, how is that done? for example, the custody, how is that regulated? I mean, I guess there needs to be some custody, some accounts around custody, in which jurisdictions are they, and so on. So I think all of that needs to be very well understood. And what quite often happens with these platforms is that they are legally dispersed or into different offshore entities in different countries and so on, which kind of makes it difficult to hold to have a exact accountability. And then the agreements that you kind of are digital agreements. So basically it's a kind of a software or piece of code that executes on certain predefined conditions. And again, one would need to understand the fine print. What is it that you are exactly exposed to? But I mean, that's just really part of a due diligence to ensure that you are signed up with something that makes sense, that you don't just stumble into something because a friend of a friend told you, yes, there is something and it looks quite legit and make, I don't know how many % in a couple of months and things like that.
Erwin, have you ever had an experience with when it comes to cryptocurrency? And if so, is it possible for you to share your experience or your take personally, like from your own experience? What do you do?
So for my own experience, no, because I've been quite cautious. In fact, my sister asked me, but that is already a couple of years ago, whether I'm into crypto, and I was like, no. And so apparently one of her friends started mining crypto, but quite early at the time when it was still pretty new. And so he did quite well. And then I had a friend who asked me for advice, and he was like, okay, you know, there is this platform in Dubai, and apparently you can make, I don't know what the percentage was, but it was quite a significant amount of the return on the investment that you would get on a monthly basis. And you would either be able to cash out or to reinvest. And then I did a bit of research on it, and I was like, nah, you know, I mean, I wouldn't recommend it. But if you really, really feel like it, if it really tickles you, go to it with the idea that you go to a casino. And basically, I mean, if you go to a casino, you will take an amount and you will just play with it. And if you gain, you gain. If you lose, you lose. And you just do it for the fun of it. And so that's what I told him. And so I keep on tracking this thing. And 3 months later, this whole thing blew up. And basically, there were a lot of disappointed people that all of a sudden lost their money.
Wow. So, Erwin, one of the questions that one of my staff, right, one of my colleagues actually had also was like, okay, so then with all these kind of like insecurities or uncertainties when it comes to this platform, so how do you know that this is the right platform? I know you've already mentioned some of the points where you said, okay, you have to check if it's a secure trader, what people are saying. But are there some kind of like fine lines that you need to check to know that, okay, this is like the right platform for you to mine?
Yeah. So there are some kind of international, or I mean, like Binance and so on, which are widely used. And I think, I mean, since they are widely used, they should be relatively more secure in that sense, because they are kind of internationally recognized. They have handled fairly large volumes. But still, it makes sense to make your research. And then also, apart from the kind of legal aspect and from the cybersecurity aspect, there are other things that count, like, for example, the fee structure. I mean, different platforms have different fee structures, so you would also need to look into that. And then what type of currencies they offer and so on. So now that becomes obviously then a bit of a, well, if you want to go into crypto, it requires its own kind of research.
Okay. So, Erwin, you mentioned the fact that, right, we should approach, let me say, the advisor you're giving your friend, that we should approach cryptocurrency like going into the casino, right? So, what did you mean by that? So, take for instance, maybe I have 10 million francs, and I'm thinking of what investment options I should actually take. What would be your advice to someone who has 10 million francs and is thinking of investing? And one of the options that the person is actually considering is cryptocurrency, for instance.
Yeah, so it depends on your
How will you
risk appetite.
advise?
If you have a high risk appetite, and you can, if you have a high risk appetite, you can stomach a lot of volatility. I mean, if that's kind of your thing, then cryptocurrency may be fine for you. If, on the other hand, this million francs is your only saving and you don't have anything else, and you really think you really would be concerned if you lost it, then I would say maybe not. Maybe you would need to look at a safer investment. So it depends a little bit on your overall financial position, and then also the risk appetite and the time horizon. So if you, and like I said earlier, if you take this and invest it in crypto now and say, okay, I'm not going to look at it, never mind what happens. I mean, what goes down goes up again, and we can take account of it in 5 years' time or so. I mean, that's one approach. The other approach is to actively trade it, but then that can go either way. And there are quite a lot of people out there promoting crypto, but they also offer courses, trying to educate you about crypto, and they offer training on charting software where you can basically then make your own investment decisions depending on different type of indicators, be it moving averages or the Dow theory or whatever. And these guys, obviously, they make it sound interesting. I don't know how their profit and loss account at the end of the day looks like, but they have additional income as well, which they generate from their training courses and things like that. So one mustn't forget that.
Wow. So, cryptocurrency is kind of like a very interesting topic to me, honestly. So now I was wondering, for someone who is trying to enter into this for the first time, right, Erwin, how will the person expect to get back their money?
So
For
you can,
instance, I don't know, when you, yeah, yes, Erwin, carry on.
yeah. So when you register on a digital platform, I mean, you have to basically register with, I don't know, with your ID or whatever, so to make sure that you are who you are, and then usually you can deposit a little bit of real currency, real money, CFA franc, whatever, and trade with that. And it doesn't need to be a big amount. I mean, it can be a small amount, and I think that's maybe recommended if one just wants to get a bit of experience, get the feel, get the excitement, and then take a small amount and just play with it a little bit, and then see how it goes, see what it does. I think that is really maybe the best approach, and then along the way one can learn as one goes along, because I mean it's a whole universe in itself. I mean there are so many different countries and also different ways how to trade. So you can trade the traditional digital currencies, which are quite volatile. Nowadays, there are stable coins which are linked to in a fixed rate to fiat currency or to commodities or something like that. And then there are people that also try to arbitrage between stable coins and the other digital currencies. And that may be kind of a safer trade. I mean, you make a small margin here and there by buying and selling on different platforms. But yeah, but there are different ways of how to basically make money out of crypto if you want.
I mean, the way you said it is kind of or will we be confirming what so many people think, that crypto investing in cryptocurrency is just like a game of chance? It's like you're never certain of anything.
It depends on how you approach it. I mean, if you are a trader, it's probably a game of chance. And the interesting thing is now the crypto space is full of traders, full of people that just are there by the minute, doing buying and selling, and I mean, basically doing it off their mobile phones and so on. And it's interesting that in the stock market, at certain times, you get this phenomenon as well, which is called day traders. And in times, so usually when the stock market is at a high, you find a lot of these day traders. And well, if all the prices go up, it's nice because yes, of course you can make money if the prices go up. Then when the market becomes difficult, then all of a sudden all these day traders, they disappear. And then maybe they get another job or whatever, because then it's difficult. And so this whole thing of trading, I mean, there's a lot of, especially on the stock market, there's empirical evidence that actually shows you that if you are a long-term investor or have a longer-term strategy, that you're actually better off than just trying to trade.
So I think before we go into the other options that are there, right, to cryptocurrency, so please, can you kind of like tell us some of the wrong decisions that people actually make when it comes to cryptocurrency?
Some of the long
decisions. Incorrect.
Correct. Okay.
Yes. Yeah.
I mean,
or let's not say wrong. Let's say decisions that if you were to advise them, you would think otherwise, right? Let's just say some decisions that maybe a lot of people that want to get into cryptocurrency do take, right? That maybe if you were in their position, you would think otherwise, right? Before taking those decisions. From your own opinion, this actually it's your opinion, right?
Yeah. Okay. I mean, I think it comes down to the reason, why do you want to be in crypto? If you think that crypto is a diversification of your investments, and you have some kind of review on the fiat currency system, and that you say, you're not really trusting in that, you want something alternative, I think that's quite legitimate. If you view it as something to say it's a quick get-rich-quick scheme, and you will soon be driving your dream car and living in your dream house and sipping margaritas somewhere, I think maybe that is not necessarily the most rational expectation. So then I would say that then you could end up with some wrong decisions, because you don't only have winning trades, and you also have sometimes losses that you incur. And then as a trader, And then I'm thinking now, as a trader, I mean, there are people that can make money, but quite often it's also our own psychology that works against us. So that's where a lot of the wrong decisions end up. It's because we are basically, I don't know, maybe we lose the we lack the discipline, and we take wrong decisions at the end of the day.
Okay. So anyway, now let's look at other alternatives, right? So for people who actually have money and are thinking of investing, so what are other alternatives that they have besides investing in cryptocurrency?
Well, I mean, so you can invest in stocks and bonds and commodities, and sometimes in derivatives of commodities. So what I'm saying, for example, I mean, you could commodities, piece of land is a commodity, arable land. I mean, you can do some agriculture on it. That's actually quite useful, or you can, properties is also commodity. There's also gold and silver now. You can purchase the physical gold and silver and hold the gold bar somewhere under your bed or in a bank vault or somewhere. But you could also, there are some exchanges. Shirley.
Yes, and we lost you for a bit. So we're talking about other alternatives to investing in cryptocurrency. So you were mentioning the fact that you could actually invest in derivatives, and you're talking about gold and silver, and you're about talking about some other exchanges that exist.
Yeah. So basically, what I was trying to mention with gold and silver is, so you can hold the physical asset and you can store it somewhere in a bank vault or somewhere, or you can buy exchange traded funds, for example, that are linked to gold, and then you don't need to hold the physical asset. So the fund, they will charge obviously a fee for that. If you buy into the fund, they will need to hold the physical asset for you. But since it's exchange traded, it's quite easy to enter and to exit into such a kind of derivative, and it trades very similar to shares. So you can buy it on a stock exchange and then sell it. And then of course there are shares and bonds as well that one could invest. And interestingly, I've seen now the banks in the CEMAC region is having an IPO on the regional exchange. So I think for investors that are interested to get some bank exposure, yeah, I don't know, maybe that's an interesting consideration.
Okay, so but for someone who is actually listening to this, who is not very versed with maybe these assets, right? So can you expatiate on what you mean by derivatives?
Okay, derivatives are usually derivatives of underlying products. So you can get shares and you can get derivatives of shares. You can get commodities and you can get derivatives of commodities. Mostly or originally, derivatives are used for hedging purposes. So to hedge price risk, for example, on a commodity. So meaning that if you have in the agricultural space, they are used actually quite a lot. So if you buy cocoa, you could enter into the futures market and sell a futures contract or buy a futures contract, depending on which direction you want to hedge your risk, and ensure that you can buy, especially if you buy forward. So you have not delivered, you don't have the goods yet, but you agree on to buy at some point in the future. But now you know the current price is a certain level, but that you don't know where the future price is going. So it could be more or less. And so to hedge that risk, that price volatility, you could hedge that with a derivative, with a forward contract or a futures contract. So that's the most basic explanation. Now, what happens with the derivatives, people don't necessarily use them to hedge price risk. Sometimes they use them to make money, which is where they just take a view on where the market might be heading. And then they buy a derivative to profit off that. And so with that, there are myriad different types of derivatives. There are call and put options. There are contracts for difference. And the problem is that with some of these products, they are issued by financial institutions. And now the financial institutions, they make money out of it because they issue the product. But they put them in such a way that in practice, it's probably quite difficult to profit from it unless the asset prices, the underlying asset prices, are extremely volatile. If there are, maybe yes, but and it's a whole science in itself to understand these derivatives, because to the extent that they have expiry date, the closer you come to expiry date, the less value has. I mean, especially if it's call and put options, the less value this instrument has, depending on where the relative to the price. So if it's above the strike price, of course, it's fine. But if it's far away from the strike price, then it might expire worthless. And then basically, if it does, then whatever money you invested in this derivative, you lost it.
So when is it a good time to invest in derivatives, especially if you're not trading in agricultural in the agricultural space, right? Because I know, as you rightly said, for most of the businesses that I've personally worked with, I think it's very common for us to buy things like forwards, options, and things like that. So, but for those that are not trading, like they're not in the agricultural space, when is it a good time for them to actually consider maybe trading in derivatives?
So, for example, if you, for example, have a share, if you own a certain share and you want to hedge your downside risk, you own it, but you expect that the price, and you have a long-term interest in it, so you say, okay, I'm not going to sell it if the price dips, but you expect the price in the short term to go down because of something. You could basically buy a put option, for example, to profit of that expected decline in price. That could be an example, but that's purely speculative. And obviously, it depends that your view of the market, that you are right. And I mean, these type of short-term views, they may or may not happen. That's the problem with derivatives, and why they are probably quite risky.
Okay. So, I mean, let's talk a little bit about shares, right? So, shares, like buying shares, for instance, as an alternative to cryptocurrency, right? So, but now, given our environment, I would say kind of like, let me say, the less developed countries, right? So, is it really okay? When if you want to actually get involved in buying shares, what will your advice be to people who are looking at investing in shares in our environment? Given the fact that given the type of stock exchange that we have, right, if we have to put it that way, right, some of them are not really functional per se.
Yeah, I mean, I think the in the CEMAC and also the BVRM here in West Africa, they are quite illiquid. So that's one thing. The shares are not really trading. Well, there are a few shares that are maybe trading actively, and others they are not. There's nothing much happening. But it could still be an opportunity, but for longer term trajectory. But the bottom line is, or the first step is to understand the company you invest in and to understand the future growth prospects. So if you are convinced that the future growth prospects are fine and that you are fine with the fundamentals of the company, then you can invest with the long-term trajectory. It means in the short term you may not make necessarily great returns, especially if the market is illiquid. But over the longer term, it could be there could be a good return, and then of course also with the dividend that accrues and so on. So yeah, it could be a viable option, and I mean I guess as over time as the things evolve. And more companies list and more people participate in the market, those issues of liquidity and things like that could get resolved. And so the one thing about liquidity is that it's more pertinent, the liquidity issue, for smaller shares, for smaller companies. So look at the market capitalization. Because for smaller companies, so the typical investors, apart from retail investors, can invest in small companies and big companies. It doesn't matter. But if it comes to institutions, sometimes they have certain restrictions. They can't invest in shares that have a too small capitalization. And so they will only invest in the larger ones, in the ones that have a big capitalization. And that already means that automatically those larger ones, they will have be more liquid.
Yeah, I get that. So now, for those who are actually kind of like interested in still investing in the smaller companies, right? So, how should they go about it, if I may ask? Right, given the environment where we find ourselves, what are some
Okay,
of the
so
security measures that they should take into consideration?
so the one thing is to find a credible stockbroker. I guess sometimes banks offer these services as well. So maybe it's even that a bank could facilitate that. Otherwise, it would be you would normally go through a stockbroker. There are I'm not quite sure for the CEMAC region, but see here for BVRM there are now digital platforms as well. But one has to obviously make sure that they are credible. And you would open an account with them. I guess they would run through the normal know your customer anti-money laundering checks. And then you would deposit money with them and give them instructions to buy a certain share. And if you want to sell, you give them instructions to sell. And if you want your money back, you can instruct them to pay it onto your account. I mean, that's kind of the one way how to do it. The other way how to do it, and normally they would not do that for brokers would not do that for very small amounts. But if you have a more substantial sum to invest, you could give them a mandate and say, look, I mean, I don't want to spend time on selecting shares and things like that. I give you a mandate, invest that money for me. Now, obviously, they would take fees for that, which is a question as to how much does it cost in terms of fees. But that could be an option as well.
Makes sense. Okay. Erin, thank you so much for this. This topic is kind of like a very sensitive one and very interesting one. So I think it was all left to my staff to ask all the questions that we were supposed to ask today, that we're supposed to use for this session of our discussion. So I think more questions will still come in, and if we have more questions, we'll still bring them up to you. Thank you so much for the education around this topic. Thank you so much for always creating time, despite the fact that you are not even in town, you're in Namibia. Thank you so much for making it out and considering it worthwhile to educate us around topics like this. We really appreciate it. Thank you very much, Erin.
Yeah, thank you, Shirley. Always a pleasure to be there.
Yeah, but before I let you go, right, what's the final advice that you have for those that are either investing in cryptocurrency or other financial assets?
Listen to your gut. if you yeah, sometimes your brain says one thing and your gut says another thing. Yeah, don't ignore that.
Erin, thank you. Hello, fellow viewers. It was really a pleasure having you here today with us as we were discussing cryptocurrency and other the risk associated with tokenized assets, right? So thank you so much for being with us today. It was really a pleasure. I hope you learned one or two things around cryptocurrency and other alternative investments. I hope you enjoyed the session. And please remember, if you're watching this when we are already gone, when we are no longer live, you can always leave your questions below. And if you have other topics that you would want Erin to talk on, please feel free to suggest. We are open to your suggestions. And remember, we are here because you're there. Thank you so much for being here with us. And Erin, thank you. And as you all know, my name is Munja Shelley. Love you. Bye-bye. 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 Say me hi to everyone around you in Namibia.